Okay, thank you for joining us for the last segment here of the second annual Roundtable Prime from DoubleLine. We're continuing our conversation today with the market leaders here. And what I really want to jump into is what are your best ideas for 2021? So let's go around the horn. Jim, I turn it to you. Best ideas.
Yeah, so I'm going to take the other side of Rosie's trade here about the financials. If the banks are a bunch of taxis, Uber's coming right at them right now. And that is the big four that have been performing tremendously within the financial sector. I've teased them a little bit in the previous section. Market access up 51% this year, 200% in the last 3 years. TradeWeb, which is another online platform to trade treasuries, up 35% in the last year and 134% in the last 3 years. MSCI, Morgan Stanley Capital Indexes, 75% return in the last year. S&P Global beat the S&P with a 22% return. The last two are helping you index and the big ESG movement. Now, the losers on this side is going to be the JP Morgans, the Goldman Sachses, and the traditional banks. They've all got single-digit returns in the last 3 years. The bank index overall was down 13% last year, which is why your CAPE ratio for financials is so low. I think what we're doing is we're finding out that the large banks are utilities. So everybody works at a bank. I'm going to say something's going to upset all my bank friends. Everybody works at a bank. Go to Glassdoor. Go look at what you get paid for at the electric utility, and now start slotting that in for your pay structure, because you're going to become a utility as well too. These new companies, the market accesses, the TradeWebs, MSCI, S&P Globals, are going to take their business. Their trading businesses are going to go away to platforms. Their value-added business in terms of helping construct portfolios and putting together ESG and the like is going to go more to these businesses as well too. So within the financial sector, I think that disruption is going to continue as we move forward. A second idea for you, I happen to think that inflation is a bigger concern and so I want to play it directly and simply. I want to short the 10-year treasury. TBT is the ETF, or just short the 10-year treasury. I think yields are going to go up, and I think it's going to wind up being a good investment for it. Quickly, the third idea. We did mention briefly somewhere about central bank digital currencies. That's never going to happen. And the reason it's never going to happen is central bank puts together digital currency. They got to put together a platform in order to do something with it. That's a fancy way of saying you and me and everybody else, I can have an account with the Federal Reserve directly. I no longer need Wells Fargo, Bank of America, JP Morgan, or Citi. Their whole deposit business can go away with a central bank digital currency. If you're going to build a central bank digital currency and you're going to try and use a traditional bank as the front end, there's no point in building a central bank digital currency at that point. So while I think that digital currencies and cryptos are the future, maybe not Bitcoin, I'm not sure, I'll play the Coinbase IPO when it comes later this year. I think that at some point, I've likened this idea about what's happening with cryptos to the early part of search engines. Early on, if you go all the way back, we had AltaVista, very first search engine, went out of business. Lycos went out of business. Then we had Yahoo. Yahoo was very successful, made the S&P 500, and then we got Google, and it changed everything. Maybe we're in the Lycos to, Yahoo kind of phase. Maybe Bitcoin goes away, maybe it doesn't, or maybe Ethereum or one of the stable coins takes over. Yeah, maybe so. But at some point, it's coming, and it's coming in a big way. And that is a cryptocurrency that will be a viable alternative to the dollar. It may not exist now, still might be 10 years away, but the basic way I want to play it is I don't want to pan for gold. I want to be the pick and shovel guy, and that's Coinbase. And that's why I think I'd be very interested in the Coinbase IPO when it comes later this year.
All right. I'm still an Ask Jeeves user, so it has now rebranded itself as Ask, so it's simpler to use. No one wants to type that much.
You're the guy. You're the guy.
I'm the one guy still using it. Yeah. So anyway, with that, Mr. Bianco, any parting shots here?
Yeah, I'll just go back to my first comment and just reiterate it in regards to everything else we've been talking about. if you're going to keep mailing people money, and Rosie, you brought up the statistic I've been looking at, 20% of the American income comes from the government mailing it to you or direct depositing it in your account. And we just passed 900 billion, and we're talking about another 2,000. If there's no consequence, if all it does is give something to people and produce higher prices in asset markets because some of that money goes plowing into Robinhood accounts, we're going to do it again and again and again. And your wage inflation is going to be booming personal income via the government sending everybody money. It's going to be the same effect as big wages coming down the road. And that's where you're going to get the inflation. The only thing that's going to stop this, I think, is going to be an adverse outcome of some kind where people stand up and say, we got to stop doing this because bad things are happening. Right now, there's no bad things happening, so it's really hard to say stop doing it. It's just a theoretical argument that it will be bad things down the road, and you're just denying the poor the help that they desperately need right now. That's my biggest concern as we move forward from here, is the $2,000 check is going to beget another $2,000 check after that, which is going to beget more stuff after that until we get that adverse outcome.